Bridging Trends, brought to you by MT Finance, Brightstar Financial, Ennis Private Clients, Positive Lending and SPF Short-Term Finance. Take a look at our latest infographic to discover the general trends in the UK bridging finance market during the third quarter of 2017. Contributor gross lending fell in the third quarter to £142.75 million, down 4.9% on the second quarter, but up 2% on the same quarter last year. First charge lending remained solid in Q3, indicating consistent investment in residential properties to let, while second legal charge lending increased for the second consecutive quarter, rising to 18% from 17.2% during Q2 2017. Average monthly interest rates across first and second charge lending decreased to 0.82% from 0.84% in the previous quarter as competition amongst lenders forced rates down. Unregulated bridging loans continue to dominate the landscape, with the number of unregulated loans climbing to 57.1% of all lending, up from 53.9% in Q2. With the implementation of the new rules relating to the treatment of portfolio landlords, this upward trend is likely to continue for the foreseeable future. Average LTV levels hit 49.6% during Q3 2017, up from 45.4% on the previous quarter, suggesting continuing investor confidence in the market with continued appetite for leverage. The average term for a bridging loan increased from 11 to 12 months, demonstrating how the bridging loan market has changed over time from being a short-term fix to providing medium-term solutions. The average completion time on a bridging loan application in Q3 increased by 4 days, as service levels and resource levels were impacted by annual leave. This increase could also be attributed to the increase in second charge lending, as processing times are usually longer for this form of finance. 10% of bridging loans during this quarter were taken out for auction purchases. This was up from 9% in Q2 2017. 13% were for business purposes, up from 11% in the previous quarter. 23% of bridging loans were taken out for refurbishment purposes, down from 27% in the previous quarter. 12% of bridging loans during the last quarter were for re-bridging existing facilities. This was down 1% from 13% in Q2 2017. Mortgage delays accounted for 31% of the total, up from 25% in the previous quarter. And 11% of bridging loans were for other purposes, down from 15% in the previous quarter. Mortgage delays were the most popular reason for obtaining a bridging loan in Q3 2017, contributing to 31% of all lending and reversing the second quarter blip where refurbishment purposes exceeded mortgage delays. Aside from Q2 2017, mortgage delays have dominated the landscape since bridging trends started.
Bridging Trends.